Hello and welcome. William here, owner and founder of exclusiveannuities.com. It's a pleasure to get on the overview call with you guys today. Thank you for tuning in. Today, I will be going over the Allianz Benefit Control Annuity, one of the more popular annuities in the annuity space currently, with an A plus rated carrier here, Allianz Life. So today, I'm more than happy to go through the products with you, different proposals, how we really structure this policy, break it down from A to Z standpoint. And if you ever need to find us, you can go right to our website, which is exclusiveannuities.com. And our firm, we specialize in finding the highest contractual guaranteed products for you on the annuity market, whether you are pre-retirement, active retirement, just looking to protect principal, guarantee income for life, legacy planning, or long-term care, we have you covered there. Our firm specializes in the highest contractual guarantees available to you on the entire market, and we work with over 65 different carriers. We're non-captive as an agency and a firm. We also have a wealth management branch as well that we exercise through our firm, and we service annuity clients all over the nation. We are licensed in all 50 states as well, and pleased to bring the information to you today. So today's discussion is going to be around the Allianz Benefit Control Annuity. There will be more YouTube content that comes out, specific products, companies, concepts that we can apply to your retirement portfolio and strategize with you during your golden years in retirement. So here is our website. You can always go here, find out more information, visit our YouTube as well at Exclusive Annuities. Please like and subscribe. My name is William Rapp. I'm the owner and the founder. And like I said, you can always book a call here. If you press speak to an advisor, it will bring you right to our website, booking link where you can pull up my calendar and speak with me personally anytime. Basically, you would just pick a time necessary, put in your first name, last name, and leave any comments or notes. Say, hey, William, I watched your video on YouTube. I'd like to schedule a call, get a consultation. And you can do that at any time. You can also do that with my business partner here as well, Vice President Brady. And we thank you for tuning in today. So here's our website. Let's go right into it today, guys. First thing I'd like to show is this particular website. It's called myannuitystore.com. And I bring this website up because this publication basically is going to go over publication about the 10 best fixed index annuity companies of 2024, which is the year that we're in. Today's July 24th, 2024. And basically, if we scroll all the way to the bottom here, we will see Allianz Life right at the top. So a lot of our concepts are built around very strong financial institutions, Allianz being one of them. They've been around since the 1800s. They are AM Best rated A plus, and they've been through the test of time. Very reliable and strong company from our professional opinion. And we're going to go over the Allianz Benefit Control Annuity today, which is also known as the Allianz ABC, one of the more popular products on the market currently. And first and foremost, I'd like to go over, the client brochure. And then I would also like to go over the company history as well. So first and foremost, let's just go over the company client brochure for this particular product. This is called like I said, the Allianz Benefit Control Annuity. Won't spend too much time on the product brochure. What I'm going to do is go right into an illustration for you guys, show you how exactly we structure these products, what it does for you. It's a Swiss Army knife type of annuity that gives a lot of different benefits as far as what you can actually do with the concept itself. But just some key pointers here. You can enjoy the flexibility and begin lifetime income anytime for single or joint payout. You can also structure how aggressively you want to build your asset, accumulate your asset. Again, these products also have no risk no market exposure. If we have negative years in the market, you are guaranteed a 0% return. Based on it being a fixed index annuity, there's no direct downside risk to your money. And you can establish a game plan that really can help you address changes in the cost of living. So, Allianz Benefit Control is an insurance product. It protects your money from market risk. It gives you control of your income, projected income in retirement, and gives you the opportunity to earn index credits when the market does well. There are some key highlighted factors that I'll go over in the illustration. You do have 10% free withdrawal provisions in this annuity as well, outside of the guaranteed income rider, which there's no charge for in this product. So there's absolutely no fees in this product. I just want to make that known first and foremost. And this is a guaranteed pension-like income product that can really supplement retirement income on top of Social Security, any pensions that you get, or just adding to your distribution model through your retirement years. And there's a couple different indexes that we can allocate to. I'll jump through that once I pull up the illustration software. And this is a general overview of how the product works. So there's a couple neat components on the policy, right? You can earn interest in two ways. You can basically get accumulation to your asset on top of what's called your protected income value. So there's two columns, two accounts per se in this particular annuity. You have your accumulated value, and then you have what's called your PIV, which is your protected income value. And this will make a little bit more sense to you again once I pull up the software in here in just a second and do a customized illustration. But long story short, accumulation of your asset with safe growth, and then also building up your income value, that pension account that turns into guaranteed income as you progress in the policy, which you can trigger income on this policy at any time within 30 days of the policy, or up to 5, 6, 7, 8, 9, 10 years. The longer that you wait to accumulate the asset and the income value, the higher your income will be. And you do have a potential for increasing income when you do trigger that pension income down the road as time goes on. So the benefit control gives us a couple different options, and I'll get into this in a second when I jump into the illustration software. But basically how the policy works is, like I said, you have your accumulated value, which is the money that you put into the annuity. And then you have what's called your protected income value. So your protected income value gets a bonus on whatever you deposit into the annuity. And it's also a flexible premium annuity. So whatever you put into the policy, as of this recording, it's a 25% bonus. Okay, so you put in 100,000, your protected income value starts with 125,000. Okay, so that basically gives you an increase to your PIV right away, which is calculated through lifetime income. So when you trigger the income on this policy, it's calculated your payout from the PIV, not your account value. So they give that 25% bonus. And again, the bonus might be different by the time you schedule a meeting with me. Sometimes they decrease bonuses. It just depends on what the current rate is at that time. We can always discuss that on a strategy session. Again, you just go to our website, exclusiveinnuities.com, and schedule a free intake overview call. We'll basically do any custom illustration for you that you need done. And back to what I was explaining. So your PIV gets that bonus up front, and then as the accumulation happens in the asset, remember, this is an indexed annuity. So we are utilizing a point-to-point indexing method inside of this annuity contract. So for simple math, when your asset gets a credit on index performance, say we get 5% back on the market, indexes, that's calculated over a 1-year period. So each year from month 1 to month 12, whatever the index increases to, you get a credit for. Now, depending on option 1 and option 2, right, you have ways that you can choose how this earned interest is applied to your account value, your accumulated value, which is your asset itself, and then also how it's dispersed to your PIV, which is your protected income value. So option 1 lets you get in a more aggressive pursuing of income savings with a 250% protected income value interest bonus factor to your PIV. That's highlighted right over here on the left side. So I'll explain this when we jump into the illustration software. But basically what happens is when your index is returned to your account with option 1 here, they give 250% of that credit an increase to your PIV. Okay. So anytime your annuity earns interest, they take that credit and they apply it and times it by 250%. They add that to your PIV every year. So you get the bonus up front to your PIV, and then every year the index is returned on a year-to-year basis. They apply 250% to the PIV as well. Now, when you take option 1, what happens is you only get 50% of the index, the original index return to your accumulated value. So if you're looking to build up your pension-like income down the road, that's when option 1 really helps you long-term accumulate a good PIV value. So when you trigger that pension-like income through the PIV, you're ready to turn on the income rider. You got the 25% bonus up front to your PIV, and then the 250% credit to the PIV every year you deferred income. So when I show you on the illustration, the PIV, how it grows, the mechanism behind this particular product is very interesting from the stance that we are building up your PIV, your income base value, protected income value, as high as we possibly can, until you're ready to trigger income. And you can trigger joint income, single income. It's also an increasing income. The income can potentially increase over time. And that's how option 1 works, which 95+% of our clients usually are getting into this product for the option 1 feature, which is a tremendous credit to your PIV every year. And again, you're not paying any fees for this income rider, which most income riders on the market currently, you would pay some sort of income rider fee to take contractual lifetime income, not in the Allianz benefit control, also known as the ABC product. So that's why we think that this is a very suitable product for the right client who's looking to put off taking income for a certain amount of years, preferably, I would say 4 to 10 years. You know, you're looking to tuck some money away and trigger income later down the road. This is a good product based on the mechanism in the annuity itself. So that's option 1. You can also opt in for option 2. Option 2 is the similar concept. Instead, when the index is returned to your account value will get 100% of the credit, as stated right here. So your asset itself gets 100% of what was credited as interest, and then your PIV gets 150% credit to the PIV. So there's just a balance between, if you want to go accelerated, not really worry about the accumulation to the asset itself, building up the PIV as aggressively as possible. And then the option 2 would be, you know, to get a mixture of both, still get full credit to your account value, and then push some credit and interest off and accumulate the PIV a little bit more conservatively per se. But most people that get into this product, what we're aiming for is the growth of that PIV. So 9 times out of 10, like I said, we're going to shoot for option 1, which is the accelerated PIV interest credit mechanism. Okay, so I won't dive too much into the rest of this brochure. What I'd like to do is jump right into the illustration software. Today, what I'll be doing for you is going right to the software, just like if you were on a call with me today, one-on-one Zoom call. Remember, we always do strategy sessions, one-on-one overviews, see if this is a proper fit for you. And like I said, this isn't just the only company or product we would use. We would do an analysis, make sure that if this is the right recommendation, we can go this route. But 9 times out of 10 on our overview sessions, we put plenty of different options on the table and go through that thoroughly with you to find the exact perfect fit with the highest contractual payouts that we can possibly get for you when it comes to rates, participation rates, caps, index allocations, liquidity in your portfolio, and again, credible, strong financial institutions as well. So this is the Allianz benefit control. What I'll do is I'll do this off a, let's just say, let me see what type yeah, let's do it off a 54-year-old male. Okay. So for example, if we were to do this illustration off a 54-year-old male, let's just say in the state of, we'll just say Arizona. Okay. So Arizona, we'll just say it's non-qualified funds. This is the illustration software. Pretty straightforward for the Allianz benefit control. I'll do an illustration for, let's just say 300,000, right? So assuming 300,000 goes into the annuity, here are the lifetime income withdrawals, right? So I won't schedule any of these yet, but I'll show you the mechanism behind how that works in a second. Again, we have the option between the balanced benefit control option or the accelerated, which you can see right here, would be the two versions that I just explained. And the next thing that I'll do is I'll customize a specific rate of 3%. And let me see, 54, 64, 74, 84, 94. So that would be 46 years. I'm going to show you guys what it looks like without taking income first. And then I'll go back and put the income switch on so you can see how the lifetime income mechanism works. We like to use a blend of indexes in this particular account. We can utilize the Bloomberg US Dynamic Balance Index, which is something we can discuss and take even a longer time on overviewing with you on a personal strategy session. The index is available, which ones are the most advantageous, and we can get into the S&P 500 as well. So there's a couple different indexes here that we can allocate to. I'll just do a blend between the Bloomberg, the PIMCO, and the S&P 500, just so we can get a good gauge of, diversity in this account. And then the next thing I'm going to do is just pull up the report. So this would be an illustration off of $300,000 for, a male that is looking to purchase this annuity, right? And the first thing that I'm going to go to is the illustration software, the illustration itself. And the first thing we're going to go down to, and I'm going to go back to a lot of this stuff, but I'm going to go back down to first the hypothetical values, the most recent 10-year period inside this particular annuity contract. So we will also take a look at, the guaranteed version, which every illustration that you look at in the annuity space is going to show you a couple different versions of how it could play out. So if you're sitting with an advisor, make sure you look at the guaranteed, make sure you look at a custom rate for this example, not on this page, but I did customize a 3% return that will be down at the bottom a little bit more. So I'll explain that in a moment. And then this is the one where it's the 10-year look back. So it's going to say, hey, based off the index allocations that we chose, this is a hypothetical assumption on how this annuity would work and look over the course of a 30-year period based on a 10-year look back period. So again, it's a hypothetical illustration. It's an indexed annuity. So the only way to honestly project is to look at past performance of the annuity itself. So you're always going to take this version of the illustration and blend it with the guaranteed, which the guaranteed version down here will show us a 0% return all the way through, right? So notice how I just shifted. It says 0% returns. So this will show us, this version will show us what's contractually guaranteed in the product, because again, it's an indexed annuity. So we're banking on market performance through the index allocations that we choose. Nothing technically growth oriented is guaranteed, but that's where we would choose specific companies, specific contracts, specific index allocations that have the best growth potential. So 0% on the guaranteed, right? And then you're also going to see the 3% return scenario right here. If you see that I customized a 3% return all the way through, that gives us like a little below average hypothetical overview of, hey, how would this annuity look? How would my income value look? How would my accumulated value look if I only got 3% average for the rest of my life? So we like to take the guaranteed, the 3% version, and then also the hypothetical 10-year look back as well. And we like to blend them so you get a good gauge of how this could perform, how it might underperform, which underperformance just means zero risk. So there's no risk in the account. We're just banking on market performance with this particular type of annuity. So no direct exposure to the market, but the index allocations are unique with Allianz because they have what's called index lock functionality. And that's another thing I want to spend a little bit of time on, explain to you about the key benefit in the Allianz benefit control, which is the index lock component. So typically in an indexed annuity, guys, what happens is your money checks in once a year. Okay, so if today's July 24th, you sign up, the contract is issued from July 24th, 2024, which is today, to July 24th, 2025, 12 months from now, whatever the indexes that you allocated to, you saw that I just allocated to the three indexes, the Bloomberg, the PIMCO, and the S&P, whatever they do from point A to point B over that 12-month period is what you're getting credited back on an annual basis every single year. It's called point-to-point indexing, okay? So the unique thing about Allianz is they have credit lock, which means while most companies, if not all the companies, are going to make you wait the full 12 months to see what the index returned at and then apply that credit to your account, you can get 6 months, 4 months, 7 months into your first year with this policy. And if we like the index's return at that given time, even though we're before the 12-month period where it would calculate the interest and apply it to the principal, we will actually get notifications twice a month with Allianz whenever your indexes are up over 3%. And we can optionally opt in to take that credit early and apply it to our account early before the full index term is up, okay? Which is very unique with an index annuity. That's why we like this contract. It's because you somewhat have control over the type of returns that you can lock in early if you don't want to wait the full 12 months for the crediting cycle to be up. So we like that about the Allianz benefit control. Now, say you lock it in 6 months early, it won't post until the 12 months is up, but you locked it in at the credit that you wanted to take, that you were comfortable taking, and then it will rinse and repeat, and you'll be able to do the same thing every single year. Now, please understand, you can't do this as of this recording. You can't do that with the S&P allocation on this annuity, but you can do it with the other proprietary indexes in this annuity. And you can also set targets, and you can also set stop losses. So say the indexes hypothetically are up to 10%, and you're like, hey, I don't want to take this yet because it might keep going up, but I also don't want to go below 8%. If we get good returns on the indexes during the 12 months, you could set what's called a stop loss, right, of 8%, and we can let it continue to rise. But if it reverses, it will cash out the index at 8%, and so on and so forth when it comes to setting targets. So you can set a target, hey, go in your customer portal, or we can even do this for you right on the agent portal. We could set a target at 10%, 9%, 12%. And we could say, hey, Allianz, when my indexes are up to this target, just take my credit. And you can do that consecutively every year with this particular. You can actually do it with all of Allianz's products, but it's good for this product because the mechanism, again, behind this particular product, now that we jump into it, works like this. So for the $300,000 premium that goes into this account, this is how it works. So when 300,000 goes in, as you see right here, the premium, you have two columns that you would want to look at and consider. So you have first and foremost your accumulated value. That's your asset itself. That's the actual money that you put in. That's what's growing on the indexes. Then you have what's called your PIV, also known as your protected income value. Okay, your protected income value is, again, what calculates your lifetime income withdrawal when you go to trigger income. Now, the benefit behind the PIV in this product is, remember, when you put 300,000 in, they're giving you a 25% bonus as of this recording. Sometimes it's 30%, sometimes it's 22%. As of right now, it's 25%. So they add a 25% bonus to your PIV. That's why you see the PIV start a little higher than what you would see the accumulated value at. Again, there's no fees in this product. And then the next function would be how the PIV and the account value grows over time. So again, hypothetical look back, but for example, we're looking at a 4.56% index return that first year, right? So first year after the 12 months is up, we got 4.56%. Now remember, we have it set on the accelerated crediting method. So what happens is half of this credit gets applied to your account value. So half of this credit is 2.28, okay? And then that's what gets applied to your account value. Now they take that same 4.56, that's what they multiply by 250%. Again, that's the accelerated crediting method, which is this number. So your end of year protected income value interest credit is 11.41. So that's 4.56 times 250 is 11.41, and that's what they're adding to your PIV. That's the mechanism that they exercise every single year with the accelerated crediting method. So this particular account is not really focused on building your accumulated value. Again, we're looking for pension-like income in the future. So half of that account value, 250% of that goes to the PIV, which you see over time, that accelerated crediting to the PIV, if we were to defer this income and not touch the account for 10 years, right? You'll see some years we got zero, right? So the following year was a negative year in the market. The worst thing that we got was a zero. So the asset itself was protected, right? Next year was a 5.10, 2.55 got applied to the account value, 12.74 to the PIV. So that PIV is getting accelerated crediting every single year, even on great years like here, 8.77 return. We got a 21% credit to the PIV that year, brought it from 620,000 to 756,000. So we do that for the longevity of the annuity until you're ready to trigger that income. So I'll show you what the income looks like, right? Again, you could trigger the income rider at any time within 30 days. You can do it years and years down the road. There's really no time limit on that. And then the third portion of this annuity, again, like I said, it's like a Swiss Army knife annuity. So if you're not ready to build or pull the income rider yet, say you want to preserve the PIV, you don't want to trigger the income rider yet, but you need some money, say you need a couple $1,000, you had an emergency, or you need to pay a bill and you just don't want to trigger the income rider yet, you just want to tap into a little bit of the account, you can pull 10% free withdrawals from this annuity off of your account value starting on year 2. So starting on year 2, your free withdrawal provision is 10%, which means you can take a little bit off the top off your account value. Your PIV will go down a little bit when you do that. But again, that's how you preserve the PIV if you're not ready to trigger the income rider yet. So that's how that works. Now, the PIV can also be used a number of ways. So you can either use it for income, lifetime income, which I'll show you how that looks in a second. The second thing you can do with it is utilize it for long-term care. So when we do the trigger income off the PIV, you'll see that it's an increasing income, and then it has a nursing home rider. So if you have an account value, right, still in your account after you trigger the lifetime income, they'll double your income contractually for up to 5 years if you're in a qualified facility, such as a nursing home, or if you have a chronic illness and you can't perform 2 of the 6 daily living requirements, okay? So those are 2 added benefits in this annuity. And then you can also just preserve the PIV for death benefit purposes. So this is also where we use this annuity for legacy planning, because if we have no intentions to really use the money in this account, it's just something that we want to pass down to our heirs, beneficiaries, family members, Allianz Benefit Control can really work over time because of the accelerated crediting to the PIV. And then, for example, let's look at year 17 here at age 70 for this individual. On the 10-year look back, you're going to see that account value is at 433 and the PIV is at 2.3 million. Okay. So when the owner of this annuity passes away, the beneficiary then has 2 options. They can opt in to take the accumulated value, which is the death benefit, over one payment. Allianz will just write them a check for whatever's in the account value. Or they can take the PIV, protected income value, over a 5-year period. So, 9 times out of 10, if we're preserving for legacy, we're going to take the 2.3 million over a 5-year period. We can also do Roth conversions in this policy as well. We could dive more into how that looks in regards to the PIV on a Roth chassis. On a strategy session, again, you can go to exclusiveannuities.com. We could do a customized illustration for you on this, dive a little bit more deeper into it. But that PIV will pay out as a death benefit if you opt in for that over a 5-year period. So that's how that works from a legacy standpoint. And then, like I mentioned, this is the 10-year look back. So if we go all the way down, by the time this individual is 75, that PIV is at 3.2 million, right? Really building up that protected income value. And again, this is showing you what it looks like without even pulling income yet. So again, we go down to the 3% return scenario. We can see what it looks like here. Just customize a rate of return so you get a synopsis of, hey, if it does great, like the 10-year look back says, that's what the numbers will be. If it does 3%, that's what it will look like as far as the PIV and the account value. And then you also have the 0% return scenario. So the 0% return scenario says that you will never lose principal. So your 300,000 will always be there, and your PIV will just stay the same if we get 0% returns in the market for X amount of years forever, right? And I always tell my clients, if that were to happen, you'll be glad that you have this annuity because everything else will look horrible, right? So, people laugh at that, but it's really true. Again, this is a transfer of risk type of annuity. You're doing the planning up front for future income, legacy, long-term care. There's a lot of things that you can do with this annuity, but what we're shooting for is that income value growth through the PIV, getting the bonus up front, and then the 250% credit that goes to the PIV every year as well. So that's how that looks, guys. Now what I'll do is I'll go back down here. I'll show you. I'm just going to keep it simple today. I'm going to show you what it would look like for this individual, if he were to trigger income on year 12. Again, the sweet spot for this annuity is a 5 to 12 year deferral on income. That gives us enough time to really build up the PIV, utilize the credit lock mechanism in the annuity, and so on and so forth before we're ready to trigger that income rider. So again, there's not everything that I'm going to go over in this video. This video is just a general synopsis of the functionality behind the benefit control annuity. If you want more further guidance on the ins and outs, the other bells and whistles, you can always schedule a strategy session with us right on exclusiveannuities.com, or our YouTube. So at any time during, this presentation or after, if you're like, hey, these guys seem to know what they're talking about, I'd like to speak with William or Brady one-on-one, just go on our website, schedule a call. We hop on Zoom with you. We do one-on-one Zoom calls, free of charge, no consultation fees, no fees to work with us, get advice from us, call our phone. We leave our contact details with you as well. And we're really here to serve you. This is just one product that we exercise if it's the right fit for the client. Again, expect more content on the YouTube. There's going to be plenty of different product overviews on the YouTube. If you go on Exclusive Annuities YouTube, you'll see that. And if you go to our website, you can go to our Facebook page, you can go to our Instagram and our YouTube, and you can search us at any time, right? So that's how you get in touch with us. Now, here's what it looks like, everybody, if you were to trigger income on this annuity. So again, same concept here, but now we're exercising the income feature, the free income rider you get inside this policy. Again, there's no charge for the income rider. That's very popular. Again, Allianz Benefit Control was actually the most used annuity in the last 24 months in the annuity space, just because it's a great concept and mechanism to really apply. And it just makes a lot of sense if you're really looking to transfer risk and get contractual guarantees in your portfolio. This is a great potential fit for the right client, right? And we would help you determine that on an intake call after going through, our intake process as well. If we think a different product would be better suited, we would just tell you that and show you that. But today this is a popular product on the market. There's a lot of people talking about it. So that's why we decided to do an overview meeting on this one first. So same concept here. We have the 300,000 going in. The numbers look the same basically for the first, 12 years. And then what we see now is the lifetime withdrawal. So that PIV that we built up for that 11-year deferral schedule, we put 300,000 in, we got the bonus to the PIV up front, and then every year we deferred, we're triggering that credit lock mechanism, and then we're beefing up the PIV every year, pension-like income, right? So by the time on year 11, we had the PIV up to 1.1 million plus, and this client, for example, wanted to turn the PIV income on. So at that point, we would just, press a button on the customer portal. We would link up your bank account, and the money's just going to start flowing in as guaranteed contractual lifetime income. If you want to trigger the pension income, and you could structure this for joint or single payout. Joint being, you know, the annuitant would take the income if they pass away. Their spouse contractually continues to take the income until they pass away. Or you can just do single payout, right? Based on how you want to structure that, which we can help you determine that as well on a strategy session. So, age 65, this client starts taking income. We turn that PIV into contractual income. And this is what the income would look like, on the hypothetical 10-year look back scenario, all the way for the rest of their life. Now, when you do trigger income, they shift you over from the accelerated crediting method to the balanced method. So now instead of the 250% getting applied to the account or the PIV, now it's 100 and 150, like I explained in the beginning. And they do that to further preserve your asset, right? Now that you're in the income phase. Now, whenever, the indexes return right here, 100% of your asset would get the credit. 150% would go to your PIV, and you see the income coming out here. And again, this is a transfer of risk type of income product. So as you guys can tell, the PIV here and the accumulated value here are both gone, about 7-8 years after the income is turned on. And you must be thinking, how are we still receiving income with no account value? And that is the whole concept of lifetime contractual annuity income, right? Even when there's no account value left, there's no PIV left, the insurance company is contractually obligated to give you the lifetime income payment for the rest of your life. So that's how you stretch, maximize the income over the longevity of your life. And you can utilize this product in many different ways. You could structure it so you never even touch the PIV. Say you're, 72, 73, and you're going into RMD. I have clients that will just take the RMD off the account value, never trigger the income rider, and preserve the PIV for the death benefit payout. That's another neat concept that we would apply on this policy as well. And that's how it works. So, this is one of our go-to products. Again, if it's the right fit, we help you make that determination at that time. But that's a contractual lifetime income. And then, of course, we can go look at the 3% return scenario. If we only get 3% all the way through, the income's going to show a little lower, right? And you can also, like I said, trigger this income rider at any time throughout the policy. So plenty of different benefits in this annuity. We like this because there's flexibility as far as legacy, credit lock capabilities, lifetime income, nursing home, chronic illness benefits, right, inside of the annuity as well. And we can explain more of that to you and do a customized illustration for you right on a Zoom call during our strategy session. And like I said, make sure that you guys like and subscribe to our YouTube, and also go on our go on our website as well if you have any questions. Really quick, what I'll do is I'll pull up our YouTube channel so you guys can just get a good gauge of who we are. This right here is our YouTube channel. It's called Exclusive Annuity Solutions. You'll see a lot of different trainings with a lot of views on them. The last training I did for my agents in our brokerage has over 1,000 views. We have our annuity intake 101 preview, indexed annuities. Do they fit in my portfolio? And plenty of content on the YouTube. Please like and subscribe. And also go to the website if you need more information on anything. Book a call with me or Brady. Here's our Facebook, here's our Instagram, here's our YouTube. And it's been a pleasure serving you guys today. You know, this is educational content for you guys to, find out which alternatives in on the safe money side are the best suited for you. So, my name is William, owner and president and founder of exclusiveannuities.com. We we are pleased that you guys tuned in today. If you need to speak with us, just go to the website exclusiveannuities.com. And today was a general overview of the Allianz benefit control. We hope that you got value and be on the lookout for more educational content coming your way. And I hope you guys have a great night. Talk to you soon.